Alex Bryce. This is going to be a short video on CTRA and what I did with it this week. Actually, let's go back to last week. But I want to bring up a chart of call and put options first. Very basically, if you are long or if you buy or if you own call options, you've got the right to buy stock. If you sell call options, you have an obligation to sell stock. Now with put options, if you are long put options, you have the right to sell stock, and if you are selling put options, you have an obligation to buy stock. So let's look at my spreadsheet now. Actually, let's take a look at this first. This is the dividend history. Now CTRA went ex-dividend on March 15th, and the dividend is going to be 57 cents, and you've got to be a shareholder of record prior to this date in order to get paid the dividend. The payment date will be March 30th. So prior to this, I think around the 8th of March, I sold a cash secured put option. Yeah, I did. I did that on March 8th, which would have been this day right here. I sold a 25 strike put option, kind of hoping I'd get assigned shares. And I did get assigned shares. Take a look at the spreadsheet here. Okay. On the 8th of March, I sold this put option. I got $30 for it. I netted out $29.49. What that means is if CTRA closes under $25 on March 10th, I own 100 shares at $25. That's exactly what happened. So then we come up to the 15th, which was the X date, and let's take another look at the price chart. So this would have been the 13th. This was Monday, Tuesday. This was Wednesday. We had the big gap down, and then the stock pretty bearish on Wednesday. I sold two put options on Wednesday. I sold a 23 strike that expires March 24th, and then when CTRA dropped intraday, I sold a 22.50 strike, which expired today on March 17th. So that's these two trades here. Now, this one here we've been texting about today. I was joking. I wanted you guys to keep the price above $22.50, which you did, and I'm happy about that. So this expired worthless. So I sold this option for $50. Since the option expired worthless, since CTRA closed over $22.50, I have no obligation to buy shares. I pocket my $50. Now back to last week where I did get assigned. Even though I got assigned, I still pocketed that $30. So I'm still short one put option. I'm short the 23 that I got paid $65 for. It expires on March 24th. So to date now, I've taken in $143 in option premium. Now, I want to show you the different part of the spreadsheet real quick. So this is my average cost. I've got 100 shares with an average cost of $25. Less the premium sold, so my net cost is $23.57. Now, I'm going to have this dividend on March 30th. So I'm not going to put that into the spreadsheet yet because I haven't been paid yet, but let's just say today's March 30th and that dividend got paid. That would bring my net cost down to $23. So now going forward, now I want to sell call options. Bring this over here. I want to sell call options, which will give me the obligation to sell my stock. So right now my cost is $25, but my net cost is 23 something. So I want to sell $25 strike or higher call options. So looking out to next week, on the left we have the calls, on the right we have the puts. So right now the $25 calls aren't bringing that much. They're between 5 and 15 cents. I'm hoping we get a pretty big price pop, because CTRA took a crap this week along with crude oil, and I don't know what natural gas did, but I have a feeling with the bank situation and with crude oil down, that's what caused CTRA to drop. So if CTRA could get up another buck or so, there'd be some pretty decent premium up here. And I could even go out a week ahead if I wanted to. I could go out 2 weeks. And now this isn't too bad here. That's 20 by 30 cents. Or I could even go higher. I could go $25.50, $26. The point here is whatever call option I sell, I'd be obligated to sell my stock at that price, but I'm getting paid a premium for doing it. And I like to sell premium as short term as possible. So hopefully next week we get a price pop. Hopefully I could sell 25, 25, 50 strike calls. It'd be nice to get 20, 25 cents, which would equate $2 because, as we know, one option contract controls 100 shares, but options are quoted per share. So these quotes here, multiply them by $100. This video went longer than I thought it would. I'm pretty long-winded. Hope you guys like it. Have a great weekend. Talk soon.